The construct is the same. It's not a mystery. It is a repeat of the debt cycle. They are rolling the debts. They are doing the same thing. Each cycle is not to do with a halving cycle, nothing to do with any of that. It's all driven by liquidity cycle and funding of debts. Each phase, we get phase one of the banana zone, banana number one. The corrective zone, banana number two comes. Another correction, banana number three. So this is the banana zone. So that's what happened in 2020, 2021. Off we go. Sorry, that was 2017, which again looks very similar to this one. That was the last one. Here we are now. It can't be clearer to me. I've shown you the macro evidence, the technical evidence, the sentiment evidence. Everything here suggests to me that hold on to your hats. Don't fuck this up. Don't lose control of your tokens. Don't use leverage. Don't get your wallet hacked. Just sit with it. Be careful. Don't get FOMO. Do all of the right things, and we'll go up to the next phase of the correction zone. That's going to be harder, because the next one that happens, we'll have a 35% drop, and you'll all say, is it over? And you'll definitely be sure it's over, and everybody on Twitter will tell you it's over, and it won't be over.
At the core of Raoul's thesis is global M2, a key gauge of broad money supply. He argues it's being driven by two major forces, the US dollar and the global financial system, especially the banking sector. This isn't random monetary growth, it's a strategic move. Governments and central banks are intentionally steering this expansion by pushing banks to load up on sovereign debt and bonds. How? Through regulatory tools like Basel IV, and tweaks to the supplementary leverage ratio in the US. If you're finding this insight valuable, smash that like button, subscribe, and turn on notifications so you never miss a deep dive like this. We've got more videos exploring crypto, digital assets, and the evolving financial landscape. Drop your thoughts in the comments. We read them all, and your engagement helps push this content further in the algorithm. Thanks for supporting the channel, and let's dive in.
Global M2 is driven by two things: the dollar itself, which is why it's accelerating so much, and then the global financial system, that's the banks. And what they're doing now, all of the governments around the world and the central banks are forcing the banks to buy debts. Basel IV is a reason behind that. The new changes to the SLR in the US. All of this is a way of forcing bonds and debt into the banking system, and then forcing the banks to create more money using them as reserves. It's just another way of debasing the currency. So global M2, when we look at it outright, it does the same pattern every time. These patterns repeat not out of voodoo, it's because it's driven by the debt refi cycle. The average maturity of global debt is 4 years. They're all between the 3 and 5 year sector. There's some long-term debt. Nobody can issue long-term debt because the market won't absorb it. So what we find is we're shorter term. Every time we do this, we have a breakout, a retest. So this was the 16-17 cycle. This is the equivalent one, I think, now. Breakout, retest, explodes higher, does this whole liquidity tightening. That's the bear market. That's when the economy slows down. That's when rates go up. Does the same thing. COVID gave it a false, a double shot. It did it again. We're doing exactly the same thing. It's almost a complete repeat of the 2017. So what we're seeing is global M2 at all-time highs. That should mean all-time highs for asset prices. That's how the world works. What we've also got here is global M2 against Bitcoin. So it's the same chart, but now we can see what happens to Bitcoin every time this happens. It breaks out, retest, and then Bitcoin starts hitting the next leg of the banana zone. Usually you start the banana zone a bit earlier with the breakout, you have the correction, and then it goes. And I've talked about this. There's 3 phases of the banana zone. Phase 1 was Q1 last year, as we started to break out in all these measures, new all-time highs in liquidity. Bitcoin goes to all-time highs. We have the corrective period, which is the correction zone. And then we get the banana zone part 2, which is usually alt season. This is the fabled chart that everybody in the world has copied from me, but this is the global M2 chart versus Bitcoin with a 12-week lead. It's been like voodoo. It is the most voodoo-like chart I've ever come across, and it works. Will it work entirely? Often what you find is later on, Bitcoin outperforms global M2 because of the speculative mania that builds over time as people realize what's going on. What it tells us is the back end of this year is basically a one-way street with a few corrections. The corrections will be normal. You will be questioning me saying, is it all finished? Is the banana zone finished? Is it all over? Do I need to get out now? And generally speaking, just follow the money. It really is that simple. So the banana zone comes in phases. I'll show you that in a sec. But basically, in that correction, using a simple measure, RSI, we got to hilariously oversold. What normally happens afterwards, period of sideways consolidation, break higher. We've just had the sideways consolidation. This is what happens if you put all of those periods together, create an average. That looks the same as the liquidity chart. It's all the same thing, right? It's all telling you exactly the same thing, which is the banana zone is upon us. That's when the dollar had this massive move. It was a 4 standard deviation move, one of the largest, fastest moves in the dollar's history. What happens after that? Well, after the red line, number go up. People say, well, we must be near the top. What happens when we're near the top? This is everyone's fear, always. Near the top, we're nowhere near. Our cycle top indicator is a long way away from anywhere. In fact, we're at very subdued levels, much like we had in 2013 before the largest bull run of all time. Now, I'm not guaranteeing that, but I'm just saying, probabilistically speaking, things are very positive going forwards. I see no reason for any fear. Finally, the fabled banana zone chart. The construct is the same. It's not a mystery. It is a repeat of the debt cycle. They are rolling the debts. They are doing the same thing. Each cycle is not to do with a halving cycle, nothing to do with any of that. It's all driven by liquidity cycle and funding of debts. Each phase, we get phase 1 of the banana zone, banana number 1. The corrective zone, banana number 2 comes. Another correction, banana number 3. So this is the banana zone. So that's what happened in 2020, 2021. Off we go. Sorry, that was 2017, which again looks very similar to this one. That was the last one. Here we are now. It can't be clearer to me. I've shown you the macro evidence, the technical evidence, the sentiment evidence. Everything here suggests to me that hold on to your hats. Don't fuck this up. Don't lose control of your tokens. Don't use leverage. Don't get your wallet hacked. Just sit with it. Be careful. Don't get FOMO. Do all of the right things, and we'll go up to the next phase of correction zone. That's going to be harder, because the next one that happens, we'll have a 35% drop, and you'll all say, is it over? And you'll definitely be sure it's over, and everybody on Twitter will tell you it's over, and it won't be over. By our work, we suggest that because of the elongation of the business cycle, because rates were higher for longer, the forward-looking liquidity suggests that, again, probabilistically speaking, without any guarantees, this whole thing goes into Q1, maybe Q2 of 2026, which would align with Trump's, trying to win the midterms as well. So everything's lined up for us. I think it started. So keep the faith, keep building stuff, and let's keep driving Siri forward with all of this.
As the U.S. gears up for the 2026 election cycle, there's a strong chance Trump will once again push for a weaker dollar to boost growth and exports. This narrative syncs perfectly with the global debt rollover, injecting even more liquidity into the system. According to Raoul, this could be one of the clearest and most powerful macro setups he's seen in his 35-year career. But he also shares a personal warning. Don't make the same mistake he did in 2017. He sold Bitcoin at $2,000, only to watch it soar to $20,000 that same year. His message is simple and razor-sharp. Don't overtrade. Don't over-leverage. Don't get distracted. Just ride the wave. Let's go back to he interview.
So people are talking about recession now. We've had this negative GDP print. A lot of this is technically driven by the imports that are happening to load up on inventories as tariffs come, so people don't have the price shock. Okay, fine. So most of this is going to get unwound. Why? Because global growth is about to pick up super fast. So the Philly Fed, this whole presentation was put together a week and a half ago to send here, so it's all out of date. So the Philly Fed latest numbers came in exactly as predicted by us, by this chart. It's actually quite useful because I just went through this deck this morning, and all of this was from 2 weeks ago, and it's all proven to work. So Philly Fed comes down now. So what we should see is now an increase in economic activity going forwards. So i.e. the back end of the year is going to look very different than the first quarter did. I use a lot of technical analysis. I even do it on economic data, which is abhorrent to most people, but it's worked for me for 35 years. And I use, this is a a system called DeMark Indicators, and basically it's telling you that we should see the economic surprises starting to rise. Bitcoin is led by financial conditions here by 3 months. The year-on-year rate of change of Bitcoin, we should start to see very dramatic movements in the price of Bitcoin going forwards. And I'll show you a bit more about this in a sec. And to go back to that idea that the Trump cycle is repeating, I mean, it's an incredible repeat, but more powerful even than 2017. Those of us who were in crypto in 2017, that's when I made the mistake around this time of year, thinking, you know what, I'm going to sell my Bitcoin at 2,000. I bought it at 200 in 2013. It went to 20,000 at the end of the year, and I felt like a complete moron. And I managed to buy it back in the sell-off in COVID, and I bought it back at 6,500. So I sold it at 2,000 and bought it back at 6,500. That's how not to do things. That's called fucking it up. And so I'm trying to teach you how not to do that. So the dollar, Trump last time around, same thing. The market's priced in tariffs. The dollar screamed higher. It created this weak patch of growth. Trump came out and said the dollar's too high. Guess what? Scott Bessent, who's a macro hedge fund manager, I've known him for 20 years, 25 years. He understands the game. Trump said the same thing. Everyone said the same thing. The dollar's too strong. And hey, presto, the dollar has utterly collapsed. And we haven't started yet. And it's a cyclical thing. It's not the end of the dollar. That's another narrative you read. There can't be the end of the dollar right now because 87% of world trade is in dollars and 50% of the entire world's debt are in dollars. So that's 200% of global GDP is actually in dollars. So there's a shortage of dollars globally, and that won't go away for a long time. So the dollar's collapsing. This kind of thing is a massive tailwind. As the dollar weakens, it means that the more global exports pick up. Everybody who's a foreigner who services US government debt, it's cheaper to service the debt, costs them less of their domestic currency cash flows. So it's a very powerful setup. A weak dollar is incredibly good for world growth. It allows China, everybody else to start exporting. The whole world economy starts picking up. The last time this happened, the Trump cycle, well, that was the initial correction that we got. We had this whole period of correction, much like we've had now. It stopped in about March. Well, we got to about April. And then we did this. And from that correction low, it did a 23x. Now, I don't expect Bitcoin to do a 23x because this was much earlier in its adoption curve, but some of the others will. Something close to it. We've got a perfect setup. One of the best setups I've ever seen because we know the debt has to be rolled. We know the forward-looking liquidity is coming, and we know how assets react to it. So it's like having a crystal ball. Nothing will be perfect, but directionally, it should be right.
Using his proprietary DeMark indicators, Roy is forecasting a surge in the Economic Surprise Index in the coming months. Even in the face of some negative GDP prints, he sees those downturns as short-term distortions, largely driven by inventory stockpiling ahead of expected tariffs. According to his models, real economic activity is set to accelerate sharply, likely catching many off guard. And here's the kicker. Bitcoin often leads these macro shifts by about 3 months, and right now, we're starting to see the early signals emerge. If you're tracking the next big macro move, this is your moment. Smash that like button, subscribe, and turn on notifications. We're bringing you the sharpest insights before the headlines hit. Got a take? Drop it in the comments. We want to hear from you. And don't miss out. Watch our other videos on the channel for deeper dives into crypto, macro, and digital assets.